Welcome back, everyone. We're ready to start the next session. I'm David Farrer. I'm the Finance Director of the Libertarian Alliance. And this morning there was an interesting example of the invisible hand in action. I woke up, turned on my mobile, logged on to Twitter, and the first 3 or 4 messages were from someone called Steve Baker. And here he is. Steve previously served as an RAF officer in the engineering side of things and then did a degree in computer science, moved into the private sector and now back into the public sector as the Member of Parliament for Wickham. And he is involved in the Cobden Centre along with some other people here today. And our talk is going to be about honest money and the future of banking. I'll give you Steve Baker.
Thank you very much. Well, ladies and gentlemen, a very, very good morning. It's wonderful to be here. Thank you, David, for those kind words. It's a particular pleasure to be standing in the National Liberal Club as a Conservative MP talking to Libertarians. And you know what? I'm not ashamed to say that at heart I am a Libertarian. And I'll tell you why. It's because we are the good guys. We are the ones who think that society should not be coordinated by force. And so I'm not ashamed to be here with you today as a Libertarian amongst Libertarians. It's also a particular pleasure because rare is the day that I am the moderate statist in the room. But enough of the stand-up. We need to get on to our honest money and the future of banking. Here is a speech from Mervyn King, the Governor of the Bank of England, and he delivered this on Monday. In it he says, "Of all the many ways of organising banking, the worst is the one we have today." Now, this is the Governor of the Bank of England on Monday. Suddenly, I don't feel quite so unorthodox, shall we say. He goes on, and during the course of this speech, he at least floats the idea of perhaps ending fractional reserve banking. He talks about Kotlikov's limited purpose banking. But I get ahead of myself. The key point is this, that the Governor of the Bank of England accepts that the banking system we have today is the worst possible. I've got myself in trouble with some of the free banking Austrian school scholars because I've involved myself with Douglas Carswell's attempt to end fractional reserve banking. So I just wanted to share with you this point from Hayek. The present political necessity ought to be no concern of the economic scientist. His task ought to be, as I will not cease repeating, to make politically possible what today may be politically impossible. To decide what can be done at the moment is the task of the politician, not of the economist. So in the course of this, I am going to try and stand back from the nuanced economic arguments. I'm going to try and survey the broad scope of things and where the economic arguments lie. I'm not trying to offend economists, and if anybody here today or watching on video later feels that I'm too hard fixed in any particular point, please do bear in mind that I'm a politician and it's very important to me to come up with something practical which can be done. This is the scope of my presentation this morning. Why should we care about honest money? What needs to be done? How might we do it? And what will happen if we don't? So first of all then, why honest money? Here's a chart which shows the growth of Leviathan. It is from the Institute of Economic Affairs, from David B. Smith. He did a paper on our debt in a historical context. What you can see here is the blue line going up is the government growing as a share of factor cost GDP from 1900 through to 2010. The last couple of years were projections when this was produced. And the green line coming down is private spending as a share of GDP. Now, of course, GDP is a flawed number. It excludes a great deal of business-to-business transactions, but nevertheless, it's a starting point. And certainly for rhetorical effect, it's very useful. Back in 1900, 1910, the state was 10 to 15% of the economy, and there's a famous quote, which I haven't included, about this being a free country, and you could come and go, and the government would scarcely touch you throughout the course of your life. We then have the total mobilisation of the state in order to fight the First World War, and the state goes up to about 44% of the economy. We're then on a trajectory through to 1979. In 1979, the state exceeded half of GDP for the first time at around the time Mrs. Thatcher came to power. To win the Second World War, the state becomes about 70% of the economy. I'd just say that most economists, when I went to a presentation at Reform, it seems most economists look at this section, and if you actually take that in context, you're missing the important detail of the last 100 years. We now are going up through 50% this year, heading up towards 52, 53% of the economy being the state. Now, I don't want Tim to answer this question at the back of the room because I know he knows. But at the end of the Soviet Union, what proportion of the economy would you say was attributable to the state in the former satellite countries of the Soviet Union? Less than 50%, over 50%? Over 50, there's a hand there, sir.
I thought it was about 70.
Yeah, it's 60 to 70%. And in the UK today, in the north, in some areas, we're at 60%, and in Northern Ireland, it's around 70%, largely because of the Troubles. So one of the reasons why our economy is failing, for me, is because we're actually approaching the levels of socialisation in the economy that were attributable to the Soviet satellite countries at the end of the at the end of the Cold War. This is ridiculous. It's not only is it ridiculous, it's wholly absurd because we haven't actually nationalised. even the lamp hangs its head in shame. The last Labour government didn't actually nationalise the means of production, and yet they've achieved over half the economy being the state. This is something of a disaster. It's not as bad as this, though. These are debt projections from the Bank for International Settlements, again, a mainstream organisation. We see too many hockey sticks these days. But the red lines, the red lines, I'm going to have to look closely. The red line is the trajectory we're on, and then there's a green and a blue lines, which in some cases are scarcely any better, which are adjustments to public spending with minor changes to age-related benefits. But the point is, in the UK, by 2040, we'll be up at 500% of GDP would be our national debt if we continue on the trajectory we're on. This is, again, wholly absurd. This is wholly absurd, and I made this point in the House of Commons, and I said that we will not reach this position. The BIS has said that by 2040, the UK's debt interest payments on this trajectory, perhaps not where we are now, but on that trajectory, our debt interest payments would be a quarter of GDP. Now, this is ridiculous. We'd be trying to pay our debt interest and trying to meet pension contributions. How would we pay for any of the public services people expect? For me, what these charts tell us is that the whole Western world will not continue on the current trajectory of public spending. It will not go on. In the course of our lifetimes, it will come to an end. So the question is not whether our current system of social organisation will continue. The question is, what are we going to do next, and how did we come to this position? I've included a quote here, which again I used in Parliament. The UK is effectively an enormous, unfunded and effectively bankrupt pension scheme with a large speculative holding in some banks and a sideline in running a small island state off the northern coast of France. This was a chap called Nick Silver, who's an accomplished actuary, writing for the Institute of Economic Affairs. I'd love to believe he was exaggerating. Whether he is, it remains to be seen. Now, unfortunately, Keynes was not an idiot. Had he been an idiot, we wouldn't have followed his economic ideas. Hayek would have won the day together with Mises, and perhaps we'd be in a very different place. He said this. I'm not going to read the whole thing. By the way, nobody else manages to attribute this to Lenin, but it's a lovely story. It at least reflects what Keynes thought. Lenin is said to have declared that the best way to destroy the capitalist system was to debauch the currency. By a continuing process of inflation, governments can confiscate secretly and unobserved an important part of the wealth of their citizens. It goes on in here, and I'll make this available on the web, it goes on to talk about the wealth distribution ceasing to attract popular support, people losing faith in the free market and its ability to generate and distribute wealth and so on. He finishes by saying, Lenin was certainly right. There's no surer, no subtler means of overturning the existing basis of society than to debauch the currency. The process engages all the hidden forces of economic law on the side of destruction, and it does it in a manner which not one man in a million is able to diagnose. Keynes wrote that in The Economic Consequences of the Peace, which I think was in the 30s. So, let's hope we're not debasing money. Here is a composite price index produced by Graham Allen in the House of Commons Library and Louise Golding, Jim O'Donoghue at the Office for National Statistics. Forgive me facing the projector, I can't quite read the small print off here. Somebody saw this chart online when I posted it on Conservative Home and said, well, that's a natural phenomenon, could we have it on a log scale? The answer is yes. What you see here is that if you'd saved £1 in about 1800, it would have bought broadly the same basket of goods in 1900. However, if you'd saved £1 in 1945, by today it would be virtually worthless. So we have debased our money furiously. There are historians here, and I think we could have a very interesting conversation about the aspects of history going on during this process. I'll mention just a couple. During this period, that was presumably the best part of the Industrial Revolution, and if anything, we had a slight price deflation in that period, and yet we had massive growth and economic prosperity. We had an inflation here around the time of the First World War. There's then some messing about as we go on and off the gold standard. If I go back, you can see it more clearly on this chart, the linear chart. That hard kink is about 1971. I don't like using the G word, but 1971 is, of course, when the G word ceased to back money at all, and since then we have managed to debase our currency furiously. So we know what Keynes said about currency debasement. What's happened here? Well, price inflation, when I say inflation, as somebody who follows the Austrian school, actually I don't mean price inflation, I mean inflation proper, which is increasing the money supply. The Earl of Caithness spoke brilliantly on this in the banking bill debate last year, and he's pointed out that in 1971, which happens to be the year I was born, the money supply was £34 billion. Today it's about £1.7 trillion. So that means every year of my life, on average, £44 billion a year came into existence from somewhere. Oh my God, that's on fire. That will be a good one for the video. So every year of my life, more money came into existence than existed when I was born, more money than got us through 2 world wars. How does this money come into existence? Well, you can mint coins and print notes. Anyone who's looked at the numbers will know that coins and notes today are a tiny single-digit proportion of our money supply. There's central bank operations, by which I mean quantitative easing, open market operations generally, and then there's credit expansion by the banks. The banks have legal privileges which allow them to expand credit to borrowers in excess of real savings. Now, I would suggest I'd love to see more detail. If anybody can do the research, that'd be great, but I'd suggest that most of this credit expansion has come through, most of the money has come in through credit expansion. Ludwig von Mises, fortunately, was a genius. He wished not to give in to evil, but to proceed ever more boldly against it. Just to remind myself that is in fact what we're doing, I suspect I'm the only member of Parliament who consistently wears a Mises Institute wristband in the House of Commons. Gives me some pleasure. Mises said this: credit expansion cannot increase the supply of real goods. It merely brings about a rearrangement. It diverts capital investment away from the course prescribed by the state of economic wealth and market conditions. It causes production to pursue paths which it would not follow unless the economy were to acquire an increase in material goods. As a result, the upswing lacks a solid base. It is not real prosperity, it is an illusory prosperity. It did not develop from the increase in economic wealth. Rather, it arose because the credit expansion created the illusion of such an increase. Sooner or later, it must become apparent that this economic situation is built on sand. He also said, in the course of the development of a banking system with fiduciary media, that is media not backed by trust rather than anything solid, crises could have been avoided. could not have been avoided. However, as soon as bankers recognised the dangers of expanding circulation credit, they would have done their utmost in their own interests to avoid the crisis. They would have taken the only course leading to this goal: extreme restraint in the issue of fiduciary media. Now, just as a by the way, you might remember that there's been a full-scale banking collapse. Absolute catastrophe was only averted by the lender of last resort, well, indeed, by the government and the taxpayer bailing the banks out. At the moment, banks, as I discovered day after day, banks are simultaneously failing both savers and entrepreneurs. This is just crass. And the crisis, for me, for Austrians, was manufactured by credit expansion in excess of real savings, driven by government and underwritten by taxpayers. This is not a crisis of capitalism. This is a point that we, as the good guys, must hammer home again and again and again. If you looked at a part of the economic system and you found government monopoly, central planning, legal privilege, the socialisation of the costs of failure, and the privatisation of profit, you would not call that capitalism. What is wrong with our socio-economic system is that at its heart, the means of exchange suffers from all of those faults. It is statist. That is what's wrong with it. That is what has brought down our economy. Understanding this point, persuading people of this point, is vital to ensuring that we go forwards in a free society. As I say, everything hinges on money and bank credit. There's been a huge amount of talk about the big society, and every chance I get, I point out that volunteering is wonderful, gifts are wonderful, friendship is wonderful. These are part of the rich and magnificent tapestry of being a human being that makes life worth living. But the fact is, the clothes we're wearing, the projector, the building, the computers, the glass, probably even the water, these things were produced by capitalism. And capitalism depends on indirect exchange facilitated by money. I know you know this, but I'm just saying we have to point out to people that if the system of money is broken, then everything is at risk. So the question is, what needs to be done? Well, here's the Cobden Centre's objective: a peaceful, open and free society based on a stable, sustainable economy. Trouble saying sustainable, I don't know why, can't think. In which everyone has the opportunity to participate in constantly growing real prosperity. We need to rescue capitalism. We need to provide better money and banking. So we've talked about why we need to act and what we're trying to achieve. The question really is how we might do it. This is, of course, where it becomes difficult and particularly controversial. Let's start with the fundamental flaws. We have had barely restrained credit expansion in excess of real savings. I don't have the time this morning to go through the detail of how that affects the structure of the economy. I'd recommend to you Jesus Huerta de Soto's lecture at the London School of Economics this Thursday, which was hugely successful. The text of that, you were there? The text of that lecture is on the Cobden Centre's website, and we will make sure that the video is also available. But credit expansion was way in excess of real savings. As Mises explained, that misdirects the economy and creates an illusion of prosperity. Without wishing to overuse a metaphor, I can create the illusion of being extremely prosperous by taking my 2 credit cards out down Oxford Street today and spending £10,000, £20,000 on them. I'd seem to be wealthy, but of course I'd have to pay it off. Capital accumulation, that is the basis of prosperity, the formation of capital goods. It relies on real savings. Without real savings, you end up consuming capital. And again, happy to talk about that mechanism later. So what we have to do is rein in credit expansion and encourage saving and investment. Now, the good news here is that George Osborne has said very clearly, time and again, that we need an economy based on save and invest. We have the Governor of the Bank of England questioning fractional reserve banking as one of the more radical options and saying that we have the worst possible banking system. So we are perhaps going in the right direction. I should point out, of course, that what I'm talking to you today is an individual who happens to work with the Cobden Centre and who happens to be a Member of Parliament. This isn't government policy. It's not even necessarily endorsed by every member of the Cobden Centre. So let's talk about planning in bank credit. Interest, that is the time preference of economic agents. If I'm saving, what I'm doing is expressing a preference to consume more later. If I'm not saving and I'm consuming now, or if I'm borrowing now, borrowing to consume now, then I'm saying actually I have a high time preference. I want to be consuming now. So actually, for economic agents, the rate of interest should be an absolutely vital price signal as to whether people are choosing to consume now or later. It should be an absolutely vital coordinating signal in the economy. But what does the Bank of England do? What does any central bank do? It deliberately suppresses the rate of interest to create economic activity. Well, that's great. It does create economic activity. Because why? Here's a supply and demand chart, which some Austrians may object to. Sorry. If you did this with any other commodity, if you suppress the price, you would find that the supply of whatever the commodity was rapidly diminished and the demand rapidly accelerated. This is why we don't do price controls in any other commodity. People know that if you insisted that a potato could only be sold for a penny, we know that potatoes would disappear off the market. In the Soviet Union, I understand that people would sell a small piece of meat with a very large bone in order to get the weight up to a level that you could charge a price that made it worth producing the meat. We don't do price controls in any other commodity. But in money we do. The central banks suppress interest rates. That drives down the rate of savings, which is what we've seen, and it drives up the rate at which people wish to borrow. The banks have the privilege of treating your deposited money as their own, and that allows them to keep extending credit in excess of real savings. So it's that legal privilege which breaks the usual supply and demand mechanism. A range of other factors around it, other privileges, lender of last resort status and all that, but fundamentally it is that legal privilege which causes the problem. There are some other flaws in banking. There's a monopoly of the base currency. There's a government-backed lender of last resort. There's deposit insurance, which creates moral hazard. There's an inordinately complex system of bank regulation rather than simple property and contract-based law. And there are legal tender laws which prevent people shifting out of one money and into another should they cease to trust a particular currency. So that's a very quick survey of where we are. Central banking, fractional reserves, government monopoly, legal privilege. These things are not parts of a free society. So there are some problems then for the practical politician. Reformers who understand these issues very, very quickly agree on politically thoroughly impractical reforms. So, for example, abolish the Bank of England. Jesus brought that up. It's in his book. It's very well justified and explained. But it is not actually in the Governor of the Bank of England's speech as one of the things he's suggesting. The other thing is abolishing deposit insurance, which is actually a very difficult thing to propose to people who've saved all their lives and actually are being paid very low rates of interest and are very worried about how they're going to live and survive. If a politician then comes along and says, let's abolish deposit insurance, this is politically actually not a great message. It's a difficult one to convey. Thank you. The next really massive point is that reformers disagree fiercely over the question of fractional reserves versus 100% reserves. If you do as I have done and sit in a room with Austrians for a couple of days straight talking about, I chaired a colloquium talking about monetary theory, very quickly people agree that we should abolish the Bank of England and denationalise money, but they can't agree whether there should be a property right in money on demand deposit. That is money which is available on demand for recovery. If you asked me to look after a ton of wheat in my silo, it would be an obvious fraud for me to then sell that wheat to somebody and hope that I could get it back in time to meet my promise to you, that is demand recovery of your property. And yet in money, somehow all the rules break down and we think in money it's completely acceptable. So it's an unfortunate fact that even amongst Austrian school scholars, there is a fierce division about reserve ratios. It seems to be, to me, if I may, to be a question of whether people approach the problem from a philosophical angle, in which case, like Jesus Huerta de Soto, they very quickly say it's wrong to take somebody's property on demand deposit and lend it out, or they approach the question from the perspective of free banking and a utilitarian perspective on the need for maturity transformation, that is to actually go from instant demands to longer term loans, in which case they say, oh well yes, but in a free banking system where banks had absolutely no special privileges whatsoever, no central bank, no legal privileges, no deposit insurance, actually a little bit of fractional reserve banking is good, because it would allow the banks to adjust to the demand for credit in the market. So there is basically that divide between the two sides. I'm quite happy to express a preference for 100% reserved banking, but we'll come on to why in a moment. I have put on there plainly, and so I suppose I should address it. The mainstream debate for me at the moment is, I'm afraid, a bit pitiful. We're looking at Basel III, and we've got people complaining about going up to a slightly higher capital adequacy requirement, not even touching on the fundamental problems with banking, which is that it's not capitalism. We have reporters going and standing outside the Bank of England, a state central planning institution, little different from Gosplan, in order to report on capitalism. We have to break this hegemony of ideas. Mises said that ideas are more powerful than armies. That is why the pen is mightier than the sword. Now, I'm not a spinning-eyed ideologue, perhaps only on the weekends. But we have to break this idea that banking is a capitalist system. So some approaches. If we required 100% reserves on demand deposits, we would attract some Austrian, some Keynesian, some monetarist and some public choice support. Maurice Allais advocated 100% reserves. At one point, Milton Friedman explored that possibility. As you can see, the Governor of the Bank of England is prepared to float the idea. However, we would actually actively lose many other Austrians. If we simply went to 100% reserves and kept the central bank and all the rest of it, we would lose some others. If we advocated free banking, an immediate return to free banking, we would attract the rest of the Austrian scholars and the hard money monetarists, but we would probably terrify the population as we did things like abolish the Bank of England and so on and so on. If we keep on with fractional reserve central banking, we'll get the rest of the Keynesians and some of the monetarists. Some people may have seen Professor Tim Congdon's book, Central Banking in a Free Society. He believes that we should privatise the Bank of England. It's a long, detailed book, and I don't wish to do it a disservice, but that is his approach to privatise the central bank. It is, of course, it is not a naive approach. It's an approach by a well-known and well-respected professor, well thought through, that fundamentally disagrees with all of this stuff. But I ask you, is central planning capitalism? So people have these fundamental disagreements. Where do reformers agree? And I put a subtext in there of I think, with an explanation. I think reformers agree that fractional reserve deposit taking is incompatible with the other significant features of the banking system. Murray Rothbard's The Mystery of Banking explains very, very clearly how if you have a central bank backing fractional reserve banks using fiat money, fiduciary media, you get crisis because of the massive expansion of credit in excess of real savings, which those features facilitate. People also agree that an unhampered, fully denationalised market in money would resolve the reserve ratio question. Hayek, in his book, The Denationalisation of Money, page 65, explains that if you had institutions issuing private money, whatever that private money looked like, Could be Tesco issuing money backed by groceries, could be the G word, could be silver, whatever. If private institutions were issuing genuine, honest, private money, the secondary banks, not the original issuers, but banks which offered services to customers, they would be forced by market forces to hold something approaching 100% reserve ratios in Hayek's view. So we are agreed on these 2 points, that fractional reserve deposit taking is incompatible with the other features of the banking system, and that actually if we had a truly free market in money and banking, the reserve ratio question would broadly resolve itself. There are some people not within that consensus. I think it's fair to say that Jesus Huerta de Soto would always insist on 100% reserves. In a free market in banking, I would probably choose to have a 100% reserved account, but people should have these choices. What then can we do? What is a practical thing to do? I'm a practical politician. I'm delighted to tell you that I have at least 2 Mesians in my constituency who are delighted that their MP is prepared to float these issues. But that's great, but I only have 2. My job is to put my constituents first, and my constituents are very concerned about healthcare, and we could talk about the state's role in healthcare for another couple of hours. They're very concerned about the prospects for their jobs, and of course this is why I talk about money and banking. It's a big subject, it's highly theoretical, it's slightly abstract, but if we are right as Austrians, Austrian school libertarians, whichever, classical liberals of that school, whichever, if we're right, then it is the most important factor in giving people a stable, sustainable economy in which they can have prosperity for themselves and their children and a stable job. So for me, I do have to concentrate on those things which matter directly to my constituents in their day-to-day life. But my objective is this, to widen and have this debate. All of us, I suggest, need to think about these questions and widen this debate. We do need to, each of us, pick a destination. And there are really, for me, there's 10 plans we've assembled on the Cobden Centre website. But they really follow 2 paths. Either Huerta de Soto's 5-stage plan that ultimately delivers 100% reserved, free banking, choice in currencies, and start going down that path. Or we go to just straight into free banking without worrying about demand deposits and their reserve requirements, and just let the market fix it. If that's our destination, what is the next practical step we can take? What is the path that we should go down to get there? Well, I'm suggesting that if we're going to walk this walk, go down this path, then actually what we need to do next is probably to abolish fractional reserve banking. This brings us to Douglas Carswell's bill. Douglas is visionary. He has, can I just say, I'm going to make these slides available for you. They'll be on the internet for you to download. Douglas Carswell picked up these ideas and introduced a 10-minute rule bill. I'm new to Parliament. Had you all waited for me to introduce a 10-minute rule bill, you'd still be waiting until next year as I figured my way through the way it's done. Douglas has done it. I've put my name to it with him. What it would do is progressively eliminate fractional reserve banking. It has, as I've said, potential support from advocates of limited purpose banking like Kotlikov. It would give us constitutional fiat money, which is something that James Buchanan, a public choice theorist, talks about. At the Mont Pelerin Society, James Buchanan said that what we have is monetary anarchy, and that the markets cannot function with that monetary anarchy, and that we shouldn't let the crisis go to waste, we should do something about it. So it may be that constitutional fiat money with some law actually applied to what the central bank can do and what private banks can do would be a way to stabilise the money supply. And some of the Austrian school intermediate stages would agree, so Huerta de Soto would agree. It would then open the conversation to further reform. Once we had 100% reserves on demand deposits, we would then find that we didn't actually need central bank lenders of last resort because the banking system wouldn't have its fundamental instability. However, Carswell's bill is supremely unlikely to become law. Private members' bills generally are. A few do become law. I think we'll be doing very well indeed if we get a proper second reading debate. But what it has done is flag up that there are at least 2 members of the House of Commons prepared to do this. and I can tell you that the Earl of Caithness has introduced a very similar bill. He did it before us. The Earl of Caithness, who's the most experienced Conservative peer in government, he introduced his bill, I think it was in 2009, the Safety Deposit Accounts bill, which effectively achieved the same thing. I'm slightly over time, so I'll skip on. We've talked about why we need to act, we've talked about what we need to achieve, and I've talked about some of the detail about how we could do it. Well, what if we don't? Well, the ramifications of failure are these. Worse crises later. If we keep using quantitative easing, if we keep expanding credit in excess of real savings, we will just keep distorting the structure of the economy, saving up worse crises for later. You might notice that during the period of the Industrial Revolution, on that inflation chart I showed you, there was a moderate price deflation. But during the period since 1971, when we've largely seen our industrial decline, to which everybody has become accustomed, there was a massive debasement of money. Now, there's also a capital theory in Austrian school economics which talks about how credit expansion and monetary debasement affects the structure of productive goods. There's a lot in what I just said, but what we ought to be thinking is, hang on, could there possibly be a connection between our declining stock of capital goods as a fraction of the economy and the fact that we keep debasing money? It seems to me probably yes. People do perceive a failure of capitalism. They kind of know that communism's not a good idea. I have been to some meetings with proper Marxists, proper state socialist demagogues who are prepared to advocate Marxism, outright Marxism and communism. In that one meeting, there was a young man stood up and he said, look, I don't want to be accused of being a demagogue because somebody else, not myself happily, somebody else had accused these Marxists of being demagogues. He said, I don't understand why my life keeps getting worse. Prices are going up, my rent's going up, I'm not earning as much as I was, my life's getting worse. People need to understand genuinely what is happening in the world, and what is happening in the world is we've got a bad system of money and it's ruining capitalism. If the public in the future faced a choice in a crisis, between a bunch of demagogues who said what's happened is capitalism has failed, and a bunch of people who believe in the free market, who say the free market has failed, they'll have to make a choice. I don't want to paint too dark a picture, but you can imagine they would have to make a choice. Would they want more of the state, or would they want more freedom? Now, if we are right, if the Austrian School of Economics is right, then what we must have, for the sake of our civilization, and I don't think that is overstating it, is more freedom. More freedom in money and banking. And that is why I'm here today, because I do need to appeal to those of you who are highly oriented to the free market and to freedom, to make this case to people that capitalism has not failed. If we miss this opportunity, we will miss it for a generation. If the market staggers on and kind of recovers, or we get into a stagflation and there isn't a precipitating crisis, we will miss this opportunity for a generation. I don't want to miss it because I care about every section of society. I want the poor lifted out of poverty. I want those who are in the middle group going on and having a stable life where they can bring up their kids without worrying about whether their kids can buy a house. I want everybody to be able to get on and have a decent life. I don't want us to miss this opportunity. I'll leave you with this conclusion. At the heart of our mess, the mess we're in economically and fiscally, is this dreadful system of money and bank credit, which the Governor of the Bank of England has said is the worst possible, I paraphrase, it's the worst possible system we could have. In my view, money should be constitutionalised, brought under control, and then denationalised. I don't want to just press the big red button that actually would have a period of chaos. I want to constitutionalise money and then denationalise it. The theorists, however, disagree vehemently, and practical politics constrain what can be done. But we mustn't miss this opportunity, so I would appeal to all of you to have a think about these issues and see whether you wish to be part of propagating these ideas. Finally, I'll leave you with Richard Cobden's words. This is why we are named for Richard Cobden. I hold all idea of regulating the currency to be an absurdity. The very terms of regulating the currency and managing the currency I look upon to be an absurdity. The currency should regulate itself. It must be regulated by the trade and commerce of the world. I would neither allow the Bank of England nor any private banks to have what is called the management of the currency. I should never contemplate any remedial measure which left to the discretion of individuals to regulate the amount of currency by any principle or standard whatever. I should be sorry to trust the Bank of England again, having violated their principle, it was called the Palmer Rule, for I never trust the same parties twice on an affair of such magnitude. I say to you this, we should not trust the same parties twice. The Bank of England, the central banks caused this crisis. We've got to put a stop to it.
Thank you very much, Steve. That was an excellent presentation. I think we're all due back here then at 2 o'clock. See everyone then.